Welcome to today's market report. European stock markets are seen opening mixed on Tuesday, with investors showing caution ahead of upcoming central bank meetings, despite signs of economic recovery in China. DAX traded 0.4% higher, CAC 40 dropped 0.1%, FTSE 100 fell 0.4%. Data released earlier today showed continuous progress in China's economic recovery in August, with retail sales increasing 0.5% year-on-year and industrial production increasing 45.6% year-on-year. Both figures beat expectations, with retail sales in particular reporting their first increase in 2020. Domestic demand is driving China's economic growth. Retail sales returned to positive growth, and new infra and traditional infrastructure investments increased, which matched the growth in these items in industrial production, according to ING. That said, investors are looking to central banks for direction, with US Fed starting a two-day policy meeting on Tuesday, the first since unveiling a landmark shift to a more tolerant stance in inflation in August. Markets will be focused on projections from Fed policymakers on the US growth outlook and on any details about what the bank intends to do to encourage inflation. Oil prices edged lower today, weighed by worries about the outlook for global fuel demand ahead of a meeting later this week of the OPEC. On Monday, OPEC downgraded its oil demand forecast for both this year and the next year. Crude futures traded 0.1% lower at $37.24 a barrel. Brent contract fell 0.2% to $39.55. Gold futures rose 0.6% to $1,975.60 per ounce. On the FX front, the GBP-USD pair is trading near daily highs just below the 129 level, up 0.36% on the day. But the 4-hour chart is pointing to further falls as the upswing looks like a corrective move. Some support awaits at the daily low of 128.47, followed by September's upthrust of 127.65. The next lines to watch are 127.15 and 126.65, dating back to earlier in the summer. The UK employment market took a step backwards in August, with the unemployment rate edged higher to 4.1% from 3.9% in the 3 months to July, the Office for National Statistics said. Given that investors are preoccupied with developments surrounding the Brexit saga, the data failed to provide any meaningful impetus to the GBP-USD pair. Investors also seemed reluctant to place any aggressive bets ahead of this week's key central bank events. This makes it prudent to wait for some strong follow-through buying before confirming that the recent sharp corrective slide is over and positioning for any further near-term appreciating move for the GBP-USD pair. Eurodollar has been extending its gains, buoyed by optimism about a vaccine and the economic recovery, but faces several headwinds. The latest upside driver has come from China, with its better-than-expected industrial output and retail sales. Germany's economic sentiment for September is set to show a minor dip in confidence, albeit from high levels. Investors in the old continent are happy with the recovery, yet rising COVID-19 cases in Europe are a cause for worry. Brexit remains also a risk factor for the euro. The British Parliament advanced a controversial bill that violates the withdrawal agreement, detailing the UK's departure from the EU. The legislation raises the chances of a hard Brexit that may have an adverse impact on the eurozone. Contrary to last week's moves, price action is limited to the pound this time, yet a rapid slide in sterling may drag the common currency down with it. The dollar index was down 0.2% at 92.92. Dollar against the Chinese yuan traded 0.3% lower at 6.7856 after posting a 16-month low of 6.7793 earlier on Monday, helping the tone were the latest China data, suggesting the world's second largest economy was recovering from the COVID-19 hit. This is today's market news. Thanks for listening. We'll see you next time.